Hi, welcome to Neppy Invest. Is this the cheapest stock on the ASX? It's a rhetorical question because I think everyone's going to have different answers. I'm not even convinced it is the cheapest stock because I don't know every single stock on the ASX well enough to actually answer this. But you have to wonder, is this the cheapest stock on the ASX based off what they're doing, their growth, and the valuation? So this company, I've already done a video on this company, and that is Mitchell Services. So on the 19th of October, Monday, they did release a shares, sort of an investor update or quarterly investor update anyway. And that sort of reconfirmed my thinking. This is a really good value growth play. And that's two things I really look for: is a company that's good value, but is also growing. So for instance, compare it to a company that's maybe good value, Telstra, for instance, that might be good value, but it's not growing at all. So the sort of the holy grail of investing is finding a value company that is high growth. That's how you just get so much share price appreciation over the long term. So let's have a look at their quarterly investor update. So this is one of the little snippets from it. You can see revenue. This is only 3 months worth. Revenue 53 million, EBITDA 10.4. Operating cash, so that's the main thing I look for, is operating cash flow and free cash flow. They don't provide free cash flow, so all they provide is operating cash flow, but $9.5 million. So free cash flow is going to be a little bit less than that, but we have a lot of cash coming into this business, and that's only one quarter. You would expect this to improve over the next year or so. So you probably say over the full financial 21, it's going to be more than $40 million in operating cash flow. It's quite significant based off their market cap, and I'll get into that to a second. And they've become a dividend-paying company, 1.1 cents per share. So no doubt they might be able to continue that dividend sort of policy, but don't necessarily need to do that. And in fact, I'm not the biggest fan of dividends because it suppresses growth and suppresses innovation. But they've also decreased debt. So because they're getting so much cash flow, they're decreasing the debt they have. So that's also added benefit there. Another slight little snippet from the quarterly investor update is just the movement here, percentage movement. Everything's going up significantly. So operating rigs, so they are a drilling company, and number of shifts increasing, revenues increasing, EBITDA's increasing by substantial amounts. These are fairly big numbers. This is, if you had a growth company reporting these sort of numbers, you'd be like very impressed. So very impressive for this company. What they've done is, in this little snippet, is looked at the 12 months rolling average, including the first quarter of this financial year. So the last 3 quarters of the previous financial year and then the first quarter. So of a rolling average of the last 12 months. So what I've done is use that, and that's in that little table we've got on the right. And then I've just sort of made some adjustments on my table. So what I'm doing is comparing financial year 2020 to the rolling 12 months, including the first quarter of 2021. So I'm looking at the last 12 months compared to the 2020 is that 12 months of the financial year. And what it shows is we're getting good growth. In fact, what it shows, it's actually cheaper now, even though we've had the share price go up with this news, it's actually cheaper now than it was before this news, which suggests the share price appreciation today hasn't taken into account the fullness of the market update. So the market cap's increased. So share price has gone from 48 cents to 56 cents. Market cap's increased to 111.3 million. 111.3 million, yet operating cash flow is 35 million, which means if you divide the enterprise value by the operating cash flow, we've got a number of 3.9. Typically, what I look for a value play, and that's not taking into account growth, I look for numbers less than 6. This is a deep value play, but it's growing. That's amazing. It just blows my mind at the moment. So no matter how you look at this is a significant value growth company that has some tailwinds and using those tailwinds to grow. Now, if you look at my previous video, I do have some hesitation within this field because drilling companies, especially if there's a mining downturn, they do suffer a fair bit. But at the moment, there's no sign of a market downturn. So you could sort of hold this, and in fact, they are fairly bullish. I'll get that to a second, but you could hold this and wait for signs of the mining downturn, which will eventually come, but not yet. So they are fairly bullish, and there's two reasons they're fairly bullish for the future, and it's based off the federal budget and capital raisings by mining companies. So the federal budget actually does suit them quite well because it should have a very positive impact on their free cash flow because they've mentioned it here why. And then they've also mentioned how capital raisings from Australian mining companies and exploration companies has increased substantially in the past year or so. And there's actually a good correlation between capital raisings and increased spending on drilling. So they are drilling companies, so that's good for them. So I'm relying on them being truthful in this, and I have no reason for them not to be truthful. I'm actually a big fan of what the management's doing, how forthright they are. I like the information they provide in a lot of their presentations, a lot of their announcements. So I'm actually a big fan of the management, and that's a big thing for me. I need to trust management. So next thing we look at is, so the market did respond to this update positively, up 10% or so. And you can see on the chart on the right, on the left there, it's broken out of a little bit of a really short-term downtrend. This could be a bullish thing, but on the left there, we did see share price rise towards 65 cents. So there's going to be a bit of resistance as it climbs through that. There's going to be holders or people who've bought in that range who now will think they can sell out, and not at a loss, they can sell out at break even. Silly sort of sentiment that, because if the share price starts going up, it's in an uptrend. And why would you sell when a share price or a company is in an uptrend? Good volume today, and it's probably the best volume on a green day for quite a while. So I am bullish in this company. We'll wait and see what happens over the next few days. This could sort of retrace back towards 52 cents or so. I think that would be good buying. But at the moment, I'm not sure why anyone would be selling this at the moment. It just doesn't make sense to me. Maybe I'm missing something. So if I am missing something, leave a comment in the comment section. I'm human. I make mistakes. I can miss something. So just leave a comment. Anyway, I'm not going to recommend anyone to buy this. I don't recommend companies to buy, sell, or hold. I am a shareholder in this, so I'm a little bit biased when it comes to this. But if you do need professional advice on your holdings or where you're heading, make sure you seek out an actual professional. I'm not a professional. So that's all for this video. Have a good day, and I'll speak to you in another video soon. See you later.